Hello, and welcome to the Wade Borth Podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, welcome back to the Wade Borth Podcast. Today, we are going to talk about something that seems very trivial, but it's also very important. We have been having a lot of conversations with clients, with prospects, people that are thinking and trying to understand IBC and what the value is. And I just want to put something out there to talk about that I just want to bring up because this is what I'm hearing. Again, it comes back to the noise I'm hearing on TikTok. And I've heard stuff, and I know I've probably railed against TikTok noise in the past, but this one's really getting to me because there's a guy out there, and somebody has been saying, it's been said many times, that what IBC is about arbitrage between the interest that you're paying on a loan and what you can make. And, like anything else, it's probably partially true. There's definitely a part to that that's right. But I think more importantly, what people have to learn and understand about the loan that you have through your policy, it isn't the interest rate. I mean, the interest rate is there, and we need to talk about it. But that's not the most important part of it. It is who controls that loan. It's really not about interest rates. It's more about control. And what does that mean? Having control of your loan. So one of the key features that you have when you have any whole life policy, hopefully if we've helped you design it, with our group has helped you design it, it's going to be designed so you can put a lot of money in, have a lot of cash value. But you might have an old existing whole life that maybe your grandparents bought you 20, 30, 40 years ago. And people say, well, can I use this one for the infinite banking concept? I'm going to say, absolutely. You can use it for IBC. And again, people get caught up, well, what's the loan interest rate? Because that's the conversation, right? We have interest rates now that are all over the place. I mean, they're jumping up a bunch, and then a little bit of news comes out, and they fall back down. And so there's a lot of conversation, a lot of noise around what the interest rates are at. So the point I want to get across is that interest rates is just one small factor in that conversation. Because the interest rate alone, just on an island by itself, you compare that to a bank interest rate, and you're thinking, well, the insurance company's charging me 5, the bank is charging me 7, the insurance company's better. I'll say yes, 5 in this case is better than 7. You're paying a lower interest rate. Now, we have to understand, too, a part of that conversation is where does that interest flow to? Is it back to an entity that I'm part of, which is the mutual insurance company, or does it flow back to Wells Fargo, which doesn't give a damn about what we think and how it affects us? They have very little interest in your success. So take a step back and say, okay, where's that interest rate? Where's that interest that you're paying flowing to? That's a separate conversation. We can have probably a separate podcast around that. But we look at it and say, okay, I'm going to go back to a year and a half ago. The loans you're getting at Wells Fargo, people say, well, I can go to the bank and I can get a loan for 3%. Why should I do a policy loan at 5%? And I'm like, you go where it treats your desires, your needs the best. But again, just the interest rate on itself is not the most important thing. The most important thing, and you've heard me talk about this, on a previous podcast, you go to sagewealthstrategy.com and take a look at our content. But I just want to be real clear about this, and this podcast just being about this, is that this is a loan that guarantees you that you can take a loan against the equity in your policy. You're a first position holder. The insurance company is obligated to give you that loan up to the equity in your policy. It's even in the contract that you have with the insurance company. So think about that for a second. Do you have any other loan in your life, in your world, in your financial world, that is guaranteed that you can take a loan out? Simplest one to give you an example is a home equity line of credit. I hear that all the time. I can get a home equity line of credit for 3%. Yeah, you can until you can't. Is it unheard of that the Wells Fargos of the world, or the Bank of Americas of the world can suspend your line of credit? Absolutely. You have to go apply for that. What if you're without a job the day you go apply for that loan? Maybe you need that line of credit because you're starting a new business. Ask anybody that's gone into business in the first 2 years of a small business. Can you get a loan from a bank? Absolutely not. Can you get a loan against your life insurance policy, against your equity in your policy? Absolutely. Guaranteed you can get that loan. That's the big difference. So what's that worth? Interest rates are just part of the conversation. I'm just bringing the rest of the conversation around. The other side of the equation is we have what we call an unstructured loan. I have a loan against my policies
It's an unstructured loan. What does that mean? I think we as professionals kind of skip over this. This is part of our skill set that we have that we should be talking about with our clients, but it is an unstructured loan. So you take out a loan, guaranteed you're going to get that loan up to the equity in your policy. You take that loan, and now it's up to you to determine what the terms are to pay it back. Now, that sounds great, but it also comes with a lot of responsibility. You have to have the discipline to say, hey, if I took a loan from Wells Fargo, I would have made that premium, that principal and interest payment back to Wells Fargo. Why don't you do that to yourself? And again, one of our previous podcasts, I talk about you have to love yourself and your family more than you love Wells Fargo. And I truly believe that because we treat their money so much better than we treat our own money. So that's another thing. Again, guaranteed access to dollars. Right now, in a lot of situations, the interest rate is lower. But I try not to make it about the interest rates because interest rates are going to move. The interest rates I have on my loans with One America are going to move. They're probably going to go up in the long run. It depends on what the interest rate environment takes us. But again, it's not that important for me to say, well, it's gone from 5 to 7. Well, if that's the case, then every other loan is probably in that 7 to 10 range anyhow. So it's not like they're sticking it to me, because if they do charge extra on those things, they have to bring it back in the form of dividends because that's profit to the company. So, and again, who would I rather pay interest to? A company that doesn't care about me and my success, or a company that has my best interests at heart in my policy, which is my insurance company, mutually owned by me, the policyholder. How valuable is that? Next, what is this guaranteed access to it? If you're going to go buy and finance a car, okay, well, you can go get the loan wherever you want. But if you're going to finance something that's going to cash flow and you need access to it, you want to be the one that's in control. Because if you can't make a business decision without saying, hey, I got to consult my banker, who's really running your business? Let me say that again. If you can't make a decision to purchase a piece of property or to make a business decision with your business without going to the banker to get approval, who's really running your business? Is it you? If you say yes, it's you, then I think maybe you need to reevaluate that, because who has the ultimate decision in your business? So who do you want to be in that position? That's all we're talking about, you being in control. So it's nothing, again, it still has a little bit to do with interest rate, but in all reality, it has very little to do with interest rate. It's about control. It's about an unstructured loan. It's about creating an environment where any interest you pay goes back to an entity that you're part of. That's the real power of IBC. It isn't 4 versus 7 or 5% interest rate on your loan versus 8 or that you can get from the bank, or flopped, or vice versa. That really has nothing to do with it. I should say very little to do with it. It has more to do with who's in control. Who gives you the ability to have an unstructured loan? Because you think about it, you're in business or you're buying real estate, and if everything worked out perfect, yeah, then you probably wouldn't need the unstructured loan. But how often does everything work out perfect? Rarely. Rarely does it ever work out perfect. Or I shouldn't say perfect, as you've planned. Again, because you're trying to plan how you see things should turn out, but it rarely ever happens that way. Or never. Maybe never is a better word. So when it doesn't happen the way you planned it, the way you envision it over the 5, 10, 15 years, whatever it might be, who's in control of that banking function and say, okay, we're going to change this because I had a renter destroy my house before he left, so I'm out of commission with that house for 6 months because I have to get it fixed and doing some upgrades or whatever it might be. Do you think Wells Fargo cares about that? They're like the loan shark. They want to be paid the first of the month. Pay me. Renter left, they don't care, pay me. New roof and no cash flows coming in from your rental property, they don't care, pay me. That's how they look at it. But you, if you're controlling that, you might say, hey, I see this as just a short-term bump. Let's just do interest only for the next 6 months until this property starts to cash flow. Okay, you're the one in charge. But you have to have discipline that goes along with that, because again, you still have to love your family and yourself more than you love Wells Fargo. So you have to apply some rules and standards to it. But again, just the loan interest rate is one factor. The rate of return on your policy it's really it's so minuscule to the bigger picture of things. The loan interest rate is it's small, it's tiny. It's like the crumbs off the piece of pie when we should be focusing on the pie itself. Yeah, look at me, right? I like pie. So that's my best analogy. So anyhow, just think about it from that standpoint. Think about the environment. Think about the terms and conditions, the guarantees. And then once you start looking at it from that lens, then the interest rate that you're paying or hey, their interest rate might go up. Well, okay, if their interest rate go up, probably everybody else's interest rates are going up as well. So don't let that be a determining factor, because it's about the control, the guarantees and the unstructured loan provision that you have, the guaranteed access to those dollars, versus having somebody else giving you a stamp of approval. So take that, again, listen to our podcast. When you're listening, hear something you like, I love for you to share this podcast with people, like it, so people can start hearing this conversation more and more. If you want to talk to us, reach out to sagewealthstrategy.com. Our podcasts are there as well, so schedule some time with us. Whatever it takes, let's have a conversation about this, because once people start putting this in the right context, right frame of mind, it will change how you think about you becoming that banker in your life. Because that's the most important, is for you to become that, not for somebody else to take that position. I want to empower you to be that person that takes control of that. Talk to you next time.
If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.